All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday, April 5th, the end of the week. This is actually my favorite video to do of the week because the week is over with. It's Friday. If you had a great week, congratulations. If you did not have a great week, maybe a little bit of studying and a little bit of reviewing, I think is the right thing to do to improve. We always talk about that. I've been trading for a long time. I've been trading institutionally for a long time. I've been managing my own money now for the last couple of years, more as a retail trader, but it doesn't matter. I'm always fighting with my head and trying not to overtrade and just doing things that even when you start trading, these are things that you do, and it's really difficult. It's always a mental battle, and I'll go over a couple of those things that happened to me this week. But let's go ahead and start with the performance. I like to do a performance review at the end of the week, and then so this is from last week's newsletter, and what I do is I just update the performance for this week, and in this way you can kind of compare it a little bit to last week. I put this week in green, and again, this is from our last week's performance. I had a great first quarter, and I'm just really looking to kind of continue with the momentum. This is what we talked about in the previous week's newsletter, and we talked about just a couple strategies, and I talked about some bad things. Even though I had a great quarter, there's still mistakes that I made in the first quarter. So we talked about that, and we talked about things that I did well, such as really not having any big losers, which is a big thing. Trying to let those winners ride as well. But anyway, that's in the past. That was last week's newsletter. We'll have a whole new newsletter this weekend to talk about strategy and to talk about setups and to review open positions as well. Because of course, I'm mostly a swing trader, so I do quite a bit of managing of existing positions and putting some new ones on. The whole rinse and repeat and so forth. But so this was the performance for the week. Notice we kind of outshined the previous week almost in just about every category. So SPY up 2.1%, Diamonds up 1.9. You can see that's this beat. IWM, which was kind of suspect a little bit over the last couple of weeks, that outperformed for the week, up 2.8%. So you basically, if you were bullish, not necessarily a perma bull. I don't like to be perma anything. I like to be as objective as possible. I try to teach that in the trading room as well, to try to be objective and kind of change with the facts that we're given and the price action that we're given. But if you were bullish, I think you got basically everything you wanted almost this week. Maybe one hiccup this week. But Qs were up 2.8%, just as much as IWM. Is that right? They're both up 2.8. Let me check my numbers. Sometimes I do have a typo in here. Just go to my spreadsheet. No, Qs were up 2.8%. Even the transports, which I don't have pictured, were up 3%. Yeah, IWM was also up 2.8%. Look at emerging markets, up 3.5%. Really strong. China was really strong. I'll bring up, I like to go over the sector numbers as well, which I'll do in a second. EFA up 2.1%. I have that bullish trade idea from Bloomberg a few weeks ago. That's working quite well. The bonds were down. We talked about where that ran into resistance about a week ago. Down 1.9%. I think we did a really good job with that one. Little pat on the back there. Gold down just fractionally, and GLD actually had a lot of outflows this week. So the only thing I have updated here is just the performance. Let me just get to. We update the index charts every week. Again, if you're not a member of Tribeca Trade Group, this is what we do. We kind of go through the major indices, talk about what to watch for. We always want to start with the top and then drill down. So kind of a top-down approach, right? That's what a top-down approach is called. You look at the major indices. I look at SPYs, Qs, IWM. Talk about the technicals. Again, any warning signs. I want to be alert for that. Places where you can set alerts. This way, you don't have to watch every 2 seconds what the averages are doing. You basically can kind of set some alerts and do a little bit of a set it and forget it type approach, and then really get concerned if they hit one of those levels, those support levels. So for this week, right, I just sent out a tweet about this. I think a lot of traders getting pretty bulled up about energy shares. I mean, these things have massively underperformed oil. I do have a chart on this. Let's see if I can bring it up. Sorry, I didn't prepare ahead of time to bring this up, but I was looking at two charts that we could talk about in the energy space, because I think from a technical standpoint, the energy names are really something that I've been waiting for a while. And again, not that I want to get really, really long energy names, but it's nice to have that sector rotation and to get involved in some other names, right? To be flexible. And you could do that as a retail trader. You don't have to watch the same exact stocks, because the reason why I say this about it's good to know a certain group of stocks and know them pretty well. But sometimes that certain group of stocks isn't always going to be in favor. So what are you going to do? You're going to play underperformers while other names outperform? You don't have to do that, right? So it's good to really take note of sector rotation, and that's the value that I kind of bring to the table. So you don't necessarily have to spot that. If you're not a full-time trader, I will do that for you. So this is XOP, right, which is the equally weighted oil and gas ETF. And it's tough to put oil futures in here, so I used USO, which again is not the perfect proxy for oil, but you could see this drastic underperformance that XOP has had. We'll go max here for as long as these two ETFs have been around, and you could see over well over 10 years that really, I guess this is energy shares outperforming oil itself. And you could see since 2016, I don't know, maybe it's the fact that a lot of these energy companies are hedging the underlying commodity. I don't have the answer to that. I'm not an energy expert or oil expert, but could it be that some of these energy producers are hedging the price of oil? I don't know. I think some of them do that, but that could be one of the reasons. I'm kind of trying to kind of rationalize this move, but really energy has been underperforming the move in crude. Another chart that I like to look at here, which I'll jump to next, talk a little bit about this subject if I can find it here. Yeah, so we could look at clean energy over what's known as traditional energy, right? And this has really been outperforming the last couple of years. Again, we'll bring this trend out a little bit further. This is just a one-year chart. If we look at the maximum, I don't think this PBW is that old. Well, maybe it is. It does go back to 2005. For a while, XLE was outperforming. So I've got the clean energy ETF in the numerator and XLE in the denominator, just like with that other situation. I had XOP in the numerator and USO in the denominator. So what this means is for a while, clean energy has been underperforming. And then it kind of based out for a while, 2012, 2017. And then if we go, let's see if I could do a 2-year chart here. Yeah, so you could see basically just over the last year, clean energy has started to outperform your traditional energy, your XLE ETF. It's kind of notable, right? And then if we look to see what the best performer was for the week, it was solar names. Solar names, which had gotten a little bit beaten up. Let's just see what the weekly chart looks like. I do want to go over the indices. I'll touch upon them as well. And again, this will be a little bit longer of a video. If you hopefully you have a little bit of time, you could have certainly watched this on the weekend. But yeah, this is the solar ETF going back to basically 52-week highs. Virgin point of control, great place to take targets. We've been talking about this a lot. A little bit of practice how to use the Virgin point of controls, right? If you're long something, basically what I do is I take profits on the Virgin point of control, especially when there isn't one right behind it. And you could see this 14 is pretty far away in the solar ETF in terms of how this thing has been moving. But look at how it fell right into support, 50-day moving average. So you could take that target or take that that position that you took off. If you want to, you can put it back on, and look how it's regaining. It's trying to regain that that level again, which I think is a bullish sign. All right, so what else in terms of sector performance? By the way, the video, of course, is for information purposes only. This is, again, not giving out any recommendations or anything like that, just purely for information and basically what I do in my portfolio. Semis also had a really strong week. We had, was it yesterday or 2 days ago that they were up huge again. So up 5.8%. So I think that was all driven by basically one day, and then some. Today they did fine today as well. I'm in a one or two semi names and had some nice performance for the day. Home builders, look at that, up 5%. The region. So again, a lot of different names up here. Maybe not with semis, but home builders up 5%. That's kind of new. Regional banks. So I think there was definitely some of that rotation that we saw. I'm surprised XRT isn't up here anyway. I didn't see how that finished today, but had that big outperformance yesterday. And then, if you turn to the right side here, pretty much risk on for the week because your underperformers were consumer staples, utilities, gold miners, even healthcare, which I was looking at over the weekend, which I thought could be a good group. Software underperformed. I'm going to talk a little bit about that rotation that we saw yesterday. REITs, how that affected me. There's retail. I guess it didn't perform that well for the week. That's surprising to me. Let's see. What did XRT do today? Is that right? Flat for the day. So a little bit of underperformance for the day. Before I get to international, let's go ahead and talk about the indices. So here's my thought. Right. So we've had a number of weeks as I've been doing these end of the week videos. We've talked about a couple times now. It feels like almost a broken record that this market is basically is performing very well. Are we overbought yet? We're getting there. If you put your eyes down to the bottom of the screen, you've got a 68 RSI. Relative strength index. I always get a little bit worried once we get to that 70 range, right? That's normally you're overbought in the indices. So we're getting there. So I always try to think a little bit or have that forward thinking, right? I mean, this was a great week for performance. My P&L is right back to 2019 highs. Even though I had a little bit, I keep saying the same thing, but a little bit of a hiccup yesterday with the software names because I was positioned. I have positions on them. I'm going to talk about strategy in that group in just a second and how to kind of put it in perspective. But I think that I'm in the mindset of trying to take off some trades and maybe wait for the next check back to support. So I floated this out on the private Twitter earlier. Think about, you think about what is going to happen next week. We're going to have earnings season. That's going to be coming in the next couple of weeks. People talk about the blackout periods where the buyback machines are essentially turned off for a lot of companies. Not every company, but we're going to have 2 weeks, 2 to 3 weeks ahead of us where it's going to be heavy earnings. So maybe the market chops in that time. That's kind of what I think. So you want to make sure that, like today and every Friday when we have a good week like this, I go through and I kind of just force some targets a bit. Again, I'm not taking off trades, but specifically in my option positions, right? One of the things that I always like to say is that options do not age like a fine wine, right? The longer that you have, the longer that you keep the positions on, especially if they're under 3-month positions, right? You've got that big drag of theta decay. So you always want to make sure that you're not holding those positions for very long, because the longer you hold them, the more they're decaying on you if you don't get the move in the right direction. But anyway, that's a whole nother topic. But yeah, so I go through and just make sure I'm trimming those positions. Like I don't really have anything. I've got very minimal exposure for April expiration. I don't really want any more April expiration unless I'm doing some type of a call spread. Because remember, we only have 2 more weeks, and it's not even 10 days. It's 9 days left for April option expiration. It's 9 because the 19th is Good Friday, so the markets are closed then. So, and it's a good thing to ask. Somebody asked me the other day, like, in this trade, why don't you just do the Aprils? I'm like, because I want to hold it for more than 1 day. April options are mainly used unless you're, like I said, unless you're selling premium or you're doing some type of a call spread and you're trying to get a measured move. They're not, April options are not for holding or an overnight trade. So excuse me, but they're not at this point a multi-day hold. So you want to make sure that you're taking those positions off, and if you still like the trade, just roll it out and up. That's what institutions do. Again, or unless you're trying to play some catalyst where you're buying options for like 30 cents and you're okay with losing the 30 cents. Anyway, that's a whole nother conversation. Let's go over to Nasdaq. I told you the video would be longer. Nasdaq looks great. You know, very similar to what the S&P looks like using the value areas, and you could see that we're now stretching above. I mean, we've gone through this value area very easily, which I thought personally that we would. Well, we did see this digestion, right? This was a little bit of a fake out with S&P. It was like, oh geez. One of the things that I said when we saw this candle, I said, wait until if we get back into value for sure, and if we break, sometimes with candlestick patterns, you'll see something like this, and you're like, oh, that's a reversal bar. Been fooled by this before. Make sure that you watch short-term moving averages as well. That helps me because you could have these what look like reversal bars, and if the price doesn't go below this yellow line, which is the 5-period exponential moving average, it doesn't mean anything, right? So there's some false signals that I see a lot in candlesticks. And keep in mind, usually it's 3 candles that make a pattern, not just one. All right, but good to cover. IWM, much different looking. That is still hasn't gotten above where we were in February, believe it or not. So finally, I think we talked about this on Friday's video when we went over this chart. We were talking about how IWM was a little bit troubling because it was making basically since this candle in February, the red candles were a lot bigger. You know, this was an inside candle, then another leg lower, then a smaller green candle. Well, finally we got a nice, this I would say looks like a reversal candle to the upside. Perfect, beautiful. What else? We could talk a little bit about the transports. Transports had a great week as well. Look at where they found the support. Thank you, value areas. The TTG market webs indicator, nice bounce. Bullish engulfing, I think we talked about that last week. Bullish engulfing and beautiful follow through. Those transports were up 3%. So again, all these things that we talked about a couple weeks ago that were trouble spots all seem to kind of resolve themselves a little bit. So I think overall really nice. You just have to be cognizant of one of my famous sayings of not getting over the tips of your skis in terms of risk exposure and making sure that you know, because here's my thought is if we do get a little bit of a pullback, it's probably going to be a great place to add risk again, right? So even if it's like down 0.5% day or something like that, it's probably going to be a great place to add risk. So you have to have that money available to kind of scan through and say, hey, what am I going to buy on pullbacks, right? And it's rinse and repeat because I really don't see a lot that is telling me to do anything else right now. It's kind of stick with the trend as we've been doing all year long and rinse and repeat with taking profits and managing those short-term option positions. And meanwhile, of course, I've got stock positions on too, which I just basically let go. Manage a little bit, but just not, but less. I don't need to be watching the stock positions with as closely as I am with the shorter-term option positions and managing them. But I tell you, it's been a really nice winning formula for me in 2019, and I talked about it in last week's newsletter how I'll continue to do that. You know, having a little bit of 2 different types of trades, probably more than 2 different types, but a few different types of trades in your portfolio for trades that you have different ideas for. I sent out a couple tweets about emerging markets, which we'll talk a little bit about next. But I've been in emerging markets. Now, this is not my usual trade, but I've got leaps on, and because I think the trend is pretty nice in EEM. So I've been in this EEM now for about 2 months. You know, and I mentioned that it was probably going to have some bumps in the road. And yeah, I mean, I think it's looking really good. It finished the week right where I want it to. So I think that looks great, and hopefully it will continue to kind of, now that it's out of that range, continue to go. But how nice is that looking? All right, any other, before I go into, let me go back to the performance. Anything else that was really notable here? We'll go down to international. I mean, ASHR, my goodness. And I'll tell you, sometimes I'm very critical of option activity, and sometimes I think it's late. I'll tell you, the ASHR call buying has been spot on, really, really good. And I know the Nigerians on CNBC have been covering that as well. I mean, it's been phenomenal. If you're not familiar with that ETF, it's the Shanghai ETF. It's different than your FXI, your MCHI. Something interesting I want to point your attention to, by the way. Now, again, performance was absolutely, really good breadth internationally. Just a couple small areas here that underperformed, but the after this is what 12 names I've got on here, and the worst out of the 12 was up 3.8%. Whew, that's sizzling. That's hot. What I want to draw your attention. So, are we starting to see profit taking going on in some of the China stuff? A little bit. A little bit. We're starting to see. There was some puts that went up. Again, not huge size. There's a little bit of this MCHI, which is a little bit of a combination of, let's say, FXI and KWeb, which is the internet, Chinese internets. A little bit of half and half. FXI has a lot of financials in it. So there was a little bit of puts there. There was a little bit of FXI puts. Also, take a look at this as well. This is the EW. Oops. This is one China ETF that's seen some buying in, but I'm really not seeing any outflows or any selling in like EEM or VWO, the big emerging market ETFs. But take a look at the EWH ETF. If you're not familiar with this one, it's Hong Kong. This is what's known as China H, as in Harry shares. They don't call them as Harry, but so that you can understand, they're the Hang Seng, right? Is what EWH is. So look at the run that this thing has been on. It's really breaking out, right? We look at the 5-year chart. It's at 52-week highs for China. So again, nobody's talking about this particular one, but look at what happened this week. It looks a little bit extended, doesn't it? It's pretty far above the 50-day moving average. So it looks like somebody took some chips off the table in this, right? These are ETF outflows that you can get from if you own a if you subscribe to a Bloomberg terminal, which I do. Look at the volume this week, and look at the profit taking. So this kind of brings up the next subject that I want to talk about, and being a little bit forward looking. There's some traders that I think I'll say on Twitter, and I would say maybe not so savvy traders, that are like waiting for a trade deal. Should you be waiting for a trade deal to go into the market? I'm going to say from a contrarian standpoint, no. I think, as the market is always forward looking, right? So I think it's already pricing in the probability of a rate hike of a trade deal that is getting closer. So the probability, I think, is going higher and higher that a trade deal is going to happen. So what do you think is going to happen once they actually sign that thing and announce it? Aren't we already getting that rally now? So the reason why I bring this up is, think about this, ponder this a little bit. Don't you think that this might be a sell the news type event? Now, I don't know that for sure, but I'm just trying to think a little bit forward. I would not be waiting. Like, somebody asked me a question about Alibaba today, which we've been all over this week. And they were saying, well, it sounded like they were waiting for do you think the trade deal is going to happen? Remember what trading for the most part is. It's buy the rumor, sell the news. That's generally a principle that happens in a lot of different scenarios, right? It's always buying the rumor and selling the news. So I would not be surprised if you get some type of, knee-jerk reaction if and when that deal gets announced and the market actually starts to go higher and then maybe sells off that day. Again, just something to think about so that you could be prepared. You may not agree with me, but that's what I think. I think that if this drags out for a couple more weeks and the market continues to rally and then they sign the deal, that's what you might have. Now, that's one scenario. Another scenario is maybe we chop for a couple weeks and we don't do anything. Then maybe we might have that last leg once the news comes out. But you have to realize how far that we've been, right? So that's one of the major takeaways I wanted to share in the video. The other thing that I wanted to talk about was the software move this week, right? I think that, and I wanted to put this in context, right? So IGV, right? This has been the leader of the market this year. However, again, kind of fundamentally thinking about this for a second, or logically thinking about it, a lot of these software group names do not have any exposure to the trade war that's been going on, right? They don't, you know, as far as I know, they're a little bit sheltered, right, from you know, what's going on. More materials, industrials, semiconductors, those have to do more with even retail, you know, that has a big supply chain. Is more subject or more sensitive. So I think the software group as well as the internet group has been a hiding place, right, and has performed exceptionally well. Now that's not the only story that's been going around. They continue, a lot of these small companies, as we know, have been just crushing earnings. So that's not the whole story, but you're going to have some times when people take their money and take their profits in this group. So you really have to be cognizant of that. By the way, where did we fall to in this IGV? I look at the IGV ETF, by the way, because it's a good proxy for the group. There's a couple other ETFs out there, but notice that we got all the way into value, and then we retraced a little bit. We didn't recover at all, but you know, there's a lot of these names, such as like Zscaler is one that, notice this didn't recover yet. It had a bounce at the end of the day yesterday where I made a little bit of money in it, but you know, it could get down to the bottom of value. I would be a buyer down there, right? But this is healthy for the group because they just have gotten a little bit too far ahead of themselves, in my opinion. The valuations are also very high in this group. So what happens sometimes with high valuation names? They get sold. But you want to watch over the next couple days if they just kind of hit support and chill out, because this has happened now several times in this group where they get a little bit extended, they get knocked down, and then buyers come back in within a couple days or a couple weeks. So now this happened to me yesterday. I wasn't holding this one, the ZS, but I was unlucky. I got into a little bit of Coupa software, and a couple small pieces of some other names like SE, which is also another application name, even though it's in China. But a few pieces of some like Okta. I was holding my last piece, which Okta looks okay. Okay, Spider. But the thing is, you're going to get caught, right? If you're going to be in these names, there's going to be, from time to time, you're going to get caught. So my initial reaction, and this is where I said it's very mental in trading, right? So I was down money yesterday, and immediately, like, I go into the competitive zone, which, again, I know myself. I want to make that money back. And I'm like, okay, I'm down money. I'm going to make this back. And I said, wait a minute. Well, first of all, I had to leave yesterday for a Bloomberg interview, which we did on XBI, which had an awesome day today, which I'm excited about. But so I couldn't really trade out of the whole loss yesterday. But I said, well, wait a minute. I'm still up nicely for the week. There's no reason to press and to try to get yourself into a hole. You've got plenty of time to make up a one-day loss, and it's kind of the cost, right? These software names have been incredible for my P&L this year. So one day of kind of getting caught in a sell-off, that's a bummer. But you take a deep breath and you just kind of rinse and repeat and just realize that it's going to happen, and don't panic. Don't start putting on all kinds of risk to try to make up a small loss. It's just not worth it. And if you're playing for the long game, and I try to convey that to anybody who who comes into the room, is that I'm in this for the long game. I'm not in this for, a couple days. Somebody asked me the other day, do you do trials anymore in the room? And I said no, because I'm in this for the long run. You're not really. What are you going to come in for a couple days and think that you're going to learn everything? It doesn't work that way. Nor do I want anyone to kind of come in for a couple days and think that they're going to make massive money. I'm in this for the long run, and so that's the way you kind of have to think about it when you have a little bit of a nasty day, because they happen from time to time. And again, what was interesting about yesterday was that was one of the only groups that were down. There was a few other growth groups that were down yesterday, but listen, volatility is going to happen, and that's just is part of the game. All right, so anything else for the day? We certainly did see some call buying in XOP. I mentioned that I would talk maybe a little bit more about that. Yeah, there's some nice positioning. I'll tell you, I was in this trade earlier this week, and I bailed on it because it just wasn't doing what I wanted to. But that's okay. And I get this comment as well a few times, is that, oh, geez, why I missed it, So yeah, I missed today's rally, but really, I'm looking at this, right? So or somebody said that they missed, just a couple other names that were up 2%. Baba, I think somebody said today. Oh, geez, well, I missed the move in Alibaba. Well, what are you just looking for a day trade, or are you looking for bigger profits? Because yeah, that would have been great if you got long sometime yesterday when we saw all the call buying. Man, did we see some call buying in Alibaba yesterday that I put on Twitter. You could see. I was like, well, that's different. Somebody's going after September and crushing, some calls. So that definitely was a change in tone. And again, what I like about that type of order was that they went out in time too, right? So they bought like the momentum weekly stuff this morning, but this stuff, right? This was, I think I added this up, and it was like $6 million of premium, which is a lot, right, to go into Alibaba. So if you missed it, think about what's up here, right? 191 is like another $6 away. So don't be discouraged if you miss like the first 2%. And maybe at that point, if you feel defensive about it, there's a version point of control up here at 186, which could be some digestion once we hit that. But then maybe just put on a smaller position if you feel like you're chasing a little bit. All right, so we'll leave it there. There's plenty of other things that I could be talking about, which I will do in detail in the weekend newsletter. Can't wait to put that together for you guys. So if you're not a member, of course, you could either email me about membership options, cfromhertz@Tribeca Trade Group, or you go right to our website, tribecatradegroup.com, and get involved in our room. Thanks very much. Have a great weekend, guys, and see you on Monday.